Hi everyone, this is Christine Kopr with Sotheby's Realty in Vancouver, BC, and we're giving you your September 2024 market update. Now that the August numbers are in, we're going to take a deep dive and have a look at how things are going, because if you've been following me for some time, we have noticed that this spring we have an exponential amount of listings coming onto the market, and it is having an impact, which is starting to show up in the numbers very quickly here in August rolling into September. It is going to take a little bit of time to see how this shakes out. It may end up being a great opportunity for buyers who've been wanting to get into that detached market and have been sitting on the sidelines. The next while here might be an excellent chance for you as we see this shift and interest rates are decreasing. So let's have a look at the numbers. Okay, every month I like to take a look at this graph. It gives me an overview of what's happening in the Metro Vancouver area for the Greater Vancouver Realtors. This is our board. It goes from Whistler to Maple Ridge. So remember, this is very much high level, taking a look at, say, example, the TSX index as a way to kind of just see what's happening in the market overall. So for August, our sales were at 1,904. So that was down 18% month over month, down 17% year over year, and 26% below the 10-year average. I have to admit, these are pretty weak numbers for August, given that we just had two back-to-back rate decreases during the summertime. Haven't seen August sales this low until you go back to that 2018, 2019 period after the stress test was introduced. It is low for August sales. We'd like to see things pick up here in the fall. Traditionally, it is the second busiest time of the year. We finally have the inventory that we're going to talk about in just a moment, interest rates decreasing. So that could really set up for a great fall, but we really need to see how it all shakes out. So make sure you keep in touch with us. So new listings. 4,109 new listings came on in the month of August. That was down 27% month over month and up 4% year over year, just down 2% below the 10-year average. This is normal considering it's the summer season. It's not typically when we see a flurry of listings coming on the market. However, it is a healthy amount of new listings and new inventory coming, giving buyers selection. Total inventory available on our board at the end of August was 13,812 homes available for buyers to purchase or sellers to purchase and then sell their properties. That's down 4% month over month. So a bit of a tightening up here from July and some of the, 14,000 homes we had available, but it's also up 37% year over year. So we are seeing that continuation of more inventory coming on the market. We have needed this selection so that market participants can do what they need to do. Remember, sellers will be hesitant to bring their properties to market if they don't feel like they can find something to buy. And traditionally, we have been in a low inventory environment, basically historically over the last 10 years, barring some very short periods in time where there's been opportunity. Is this one of them? We shall see. And no one can predict the future. So if you're seriously considering getting into the housing market or it's been on your mind, now is an excellent time to book a one-on-one chat. We can talk about your options, but also analyze the potential rewards as well as the potential risks, because nobody knows which way the market's going to go. 13,812 homes available for sale at the end of August is a 21% above the 10-year average. So it's also showing we have a little bit more inventory, but it's definitely in that healthy range and what we've needed. Understanding supply and demand is critical because it influences where prices go. Statistically, between 4 and 6 months of inventory is considered a balanced market. It doesn't favor buyers or the sellers, and they typically don't last that long. As you know, markets tend to swing and move pretty erratically. Below 4 months of inventory, so 4 months and below, is traditionally considered a seller's market if it's sustained over a long period. 6 months and above of inventory is considered a buyer's market if it tends to sit there for a while because we're accumulating that inventory, and then eventually there's just not enough demand to support all of that inventory, and therefore there starts to become a downward pressure on prices because there's just not enough demand to absorb the active inventory at today's prices. So one thing that we have been watching and and we look at every month, and this is why this is probably one of the most important parts of this video, is we are watching that trend. And you can see now it's normal in December and January to have these jump ups into the inventory. And I would say also a bit during the summer as well, because it's when a lot of market participants take time off and we're not all in the house hunting, house selling game. So it's not uncommon to see a jump up in the months of inventory. But as you can see, the trend that we're seeing here for this year is we were sitting just above the 4 months of inventory, the divide between a balanced market and a seller's market. And you can see that we had the benchmark price here, because it's in white, it shows that the price was appreciating. You can see that it was more kind of on the stronger side of the balanced market for sellers, where we had price appreciation. But as we've come in further into the year, you can just see this consistent growing of inventory, and we really started to notice that inventory coming on here this spring. This is the first time in many years that we've had this much inventory coming on so rapidly and so quickly. And you can see that, lo and behold, with the demand being low, like traditionally right now our sales are about 20% or more below the 10-year average, not quite keeping up with that new inventory. And you can see that the months of inventory was starting to expand, and now we're sitting at, we jumped up from 6.1 to 7.3 months of inventory here in August, and now we're moving over into September. So it's an interesting trend, and it's a reason why we decided to take a good look at some segments of the housing market, because there could be some opportunities there for you, which we're going to cover next. Benchmark price 1.196. That's flat basically month over month, and it's down 1% year over year. So you can see that we're starting to give away some of the gains that we had earlier this year, and who knows where things are moving into the future. We are going to talk about some of the signs like interest rates decreasing, which could stimulate this market environment. Again, we are coming out of August. This is traditionally and seasonally a slower time of year. However, we are noticing that the sales so far in September have been quite weak in a particular market segment. Let's move on and just quickly have a recap of detached townhomes and condos, and then get into the deeper dive into Vancouver East. So the Metro Vancouver market, detached homes, there was 500 sales last month. Sales are down 14% year over year. The benchmark is sitting at 2,048,000. It's up 1.8% year over year, but down 0.1% month over month. And we've had these little decreases happening. So stay tuned to see what's next. Townhomes sales last month, 370. Sales are down 12% year over year. Your benchmark price is sitting at 1,119,000. Benchmark price is up 0.8% year over year, and the benchmark month over month is just down 0.5%. Again, it's pretty much flat. Condos, 1,012 sales last month, down 20% year over year. A higher double-digit slowdown in condo sales. Benchmark price is sitting at 768. Your benchmark price year over year is surprisingly up 0.1% and flat month over month. So that kind of just gives you an idea of the benchmarks. But of course, we need to get into those market segments. And today we're going to take a look at the Vancouver detached market to see what's happening there. So here we have the blue chart is the amount of inventory coming on, and you can see from last July, this is last year, steady eddy, decreasing in December. It's the fall, not a lot of people list, and then we come into our spring market traditionally when we see a lot more inventory. However, then you can see this orange line, which is our sales, and you can see the sales were pretty decent last July, around about 90 sales, and then they kind of drift down, the second busiest time of the year going into the winter, and then they really had a good run here in the spring. And as we've headed into the summer, they've tapered off. But what you can see here is that they really have tapered off. And in fact, compared to the amount of inventory that's coming on, there's actually a lot of inventory accumulating in this market segment. So if you have been thinking about detached homes, listen up. And here's where we can put this all into perspective. This column here is the months of inventory. So you can see about a year ago, we were sitting at about 5 months of inventory, neither favoring sellers or buyers. And throughout the year, it drifted up into months of inventory. That tightened up. Obviously, that makes sense seasonally as we head into the fall here, right? This is basically where we're at right now now a year ago, but this is where we are today. And you can see how that the months of inventory has taken a significant jump, over 12 months of inventory as of August. And what has also been interesting is we haven't actually seen a lot of detached sales come through. In fact, so far, there's only been 4 reported detached sales this month. Sometimes it takes time for the sales to show up, particularly after coming out of the summer, because again, the activity doesn't happen in August. It usually starts again in September. And then you start to see people getting out there, putting out offers, doing the subject removals, and then the properties are reported as sold. And so we get a lot more of the sales towards the end of the month and into October. But this is an interesting place to be in the detached market. And you can also see what's happening here with prices. The benchmark price about a year ago was just under 1.9. It jumped up just a little bit here, and then it softened going into the spring of this year. It kind of regained a little bit. And of course, these swings here, we're looking at between like 1.8 and 1.9. So, we're really looking at a $10,000 difference. So very much a stable benchmark price. However, you can see we started tapering off here, and we're sitting here at this 1.87 mark. And with that inventory building up, here's the scoop. If it happens to be that this inventory continues to climb, and we've seen a lot more properties coming on the market. It's fall, it's September. This is now the second most active time of the year where it's expected to see more listings coming on the market. And the demand does not keep up, where we are going to see further accumulation of inventory, which should probably put a bit of a downward pressure on prices. But the caveat here is the interest rates, because if you wait for lower interest rates, you could actually still end up paying more if you're trying to secure a home at a lower price once you do some of the math. So what could be an opportune time for any buyer that was thinking about getting in the detached market, whether it's now or 3 months from now? We don't know what this interest rate downward cycle is going to do. One would presume that the market's going to pick up, and then we're starting to see prices go up. But right now is kind of an opportune time where there is a lot of inventory. The market isn't moving too fast, too quickly, and therefore the upward pressure on prices hasn't showed up, and can be an excellent time for you to negotiate on a detached property on the east side. And interestingly enough, we'll take a look at the next segment in Vancouver East, and that's the townhome segment, which seems to be performing quite well. And part of that might have to do with the fact that interest rates are still keeping home buyers out of that higher $2 million mark and being forced into this lower range, call it around that 1.5, 1.1 to 1.5-ish range. And in fact, we just sold a townhouse on the Vancouver East Side in multiple offers, and 2 more listings came up in that same complex. And lo and behold, the last one to come on the market also received multiple offers. So we sold our property with multiple offers, and so did the other property. It received 4 offers and sold at a record-breaking price like ours in the complex. And there was one other sale that occurred as well with a very strong price. Interestingly enough, in these townhomes being around that $1.5 million range is really closing the gap there when you think about that 1.9-ish mark for the detached homes. And this market seems a lot stronger. Look at the inventory here. While there's some inventory increasing, it's starting to come off, but the sales, while they really came up, they pulled off a little bit, but you can see that they're also steady and more increasing versus falling off a cliff. So if you're someone with a townhome, this might be your opportunity to get an evaluation on where things are at for your particular product and see if you're able to close that gap and go from the townhouse market into the detached market. Pretty cool. Haven't seen this for a while. And here's that benchmark price. Look at that. Softened up a little bit. Again, we're looking at 1.140 all the way down to $1.6 million here. So about an $80,000 swing here in price range. But you can see it's holding on really strong, and it doesn't look like that benchmark is softening up. East Van months of inventory, as you can see, also below that 4 months of inventory. So that's looking great for the east side townhomes. This market segment really is performing very well. So if you're actually trying to move from a condo condo into a townhouse, that's where this is the segment where you have to be prepared to make your moves. So Vancouver East condos, what's happening there? Here you can see we had lowering into the fall of inventory. Now we've been seeing a rise in inventory, the blue bars. Sales are slowing down a little bit. Months of inventory, this is probably very extreme, but we're going from like, say, balanced market, 4.5 months of inventory up to 6 months of inventory. So now you're just getting into that buyer's market territory. And here you can see the benchmark price between 720 and about 705. So there's been a little bit of weakness. And if that inventory continues to accumulate, as we discussed, this could also be your opportunity to get into that condo market if you're a first-time home buyer or wanting to make a switch. So that's something to consider as well. So what's going on with interest rates? Because obviously interest rates do influence our market. They have such an impact. And we've had 3 interest rate decreases this summer and then the beginning here of September, which is fantastic. Now remember, the interest rates as announced by the Bank of Canada are all about the variable rate. So if you have a variable rate mortgage, your mortgage payment could be going down. That rate or the ratio of each payment of yours between principal and interest could change. Or if you have a line of credit, that rate changes. However, independent of that is the 5-year Canada bond, and it dictates those fixed term interest rates. And what has been very interesting is you can see earlier this year, as early as May of this year, we were sitting at 3.8%, and we're now down to 2.7% for the 5-year bond. You can see the 52-week range, 4.4 down to 2.7, and lenders are acting. We are starting to see mortgage interest rates in very low levels, which we're going to take a look at. And even today, I've seen the first headlines of 3.99% fixed term interest rates coming. And there was one tweet of a mortgage broker that managed to secure a 3.99% fixed rate for a client of theirs. So we've been hearing that the banks are getting quite competitive. For the first time since December of 2022, we're getting those lower interest rates, which prevailed prior to that really busy spring that we had in 2023, where prices really escalated. And so that's interesting. So this could be coming, that activity could be coming in the market. Traditionally, interest rates lag the activity. It takes a little bit of time. So this could be showing up. We could get that strength in the market that we're looking for. However, if we continue to get the volume of inventory, even if our demand increases, there may be just a bit more excess supply, keeping a cap on those interest rates until we get through a little bit more activity in this stage of the cycle, creating opportunity for buyers. And of course, sellers have to be extremely, extremely sharp and think very well when they're pricing their homes as well as their overall marketing strategy. Now is not the time to think that you're just going to stick a sign in the lawn and sell your property just because interest rates are coming down. So here you can see this was a post from WOW Canada. You can see some of the mortgage rates lowest since December of 2022. You can get insured 3-year fix for 5.29. Uninsurable 4.69. Of course, everybody's situation is a little bit different. Here you can see these 5-year fixed rates, pretty insane. We haven't seen these kind of rates for a while now. So we're definitely getting back into that more affordable range. And the Bank of Canada is projected to continue to decrease. We may have 2 more decreases this year, and there's a whole 1 to 2 points decrease that could happen next year if inflation remains in check and the economy shows some signs of weakness. The one thing that they need to do is make sure that they do not push us into a recession. It's somewhat questionable. It's possible that we could actually be in a recession if it wasn't for all of this in migration that's been happening. So the Bank of Canada could accelerate these decreases or continue on with that moving forward. Again, we don't know what the future holds. However, the rates, especially those fixed term rates, are starting to become a lot more attractive, and there's quite a spread between the variable rate and the fixed. It would take a lot of decreases for the variable rate to get to where some buyers are able to secure rates today. One last thing that we wanted to share that we thought was kind of an interesting note to wrap up this market update is this recent study by Altus Group, and it talks about the municipal charges per unit for a high rise. So this is about new builds coming on in the city. And of course, we all need more housing. The governments have promised that they're going to be creating all this housing. Not going to happen. It's not economically viable. But one thing that was very interesting to note, you can see here the changes between 2020 and 2022, how much municipal charges are included in every home that is being brought to market. $125,000 for every single condo that's coming to market that new home buyers are paying for. It's pretty eye-opening to see what people are paying to actually create or fund the infrastructure that our city needs for this housing. Just an interesting stat there that I wanted to share with you. Anyways, let me know what you think about that. I'm Christine Kopr with Sotheby's Realty in Vancouver, BC. I hope you enjoyed this Vancouver market update. Make sure you stay tuned for more updates like these and check in with us next month, and like and subscribe to our YouTube channel and join our newsletter list, because we do send different types of opportunities and information on the various channels. And oh, make sure you like and subscribe to our Instagram channel. Thanks so much. Talk to you next month.